It's a pleasure to have a CME Group featured speaker on camera today. We have Dan GRAMZA. He's the president of GRAMZA Capital Management and is joining us from Chicago. Welcome, Dan.
Good to be here.
If you're watching this, you've probably seen a dozen or more features educational videos by Dan on the CME website or a bunch of other speaking events like the upcoming Features I Show. Dan, was it always your goal or what you wanted to do to be a trading educator, or what did you want to do as a kid? Because this isn't your typical, this is what I want to grow up to be.
That's very true, Jeffrey. You're right. From my point of view, I started out, my background is I have a degree in engineering and an M.B.A. in finance. And when I was in engineering school, actually, I felt at that point I would not be an engineer. And what fascinated me were the markets. It was because I felt it was the most efficient use of capital. And here's what I mean by that. You and I can take money and we can make something, and then we convert that thing into inventory, and then hopefully somebody will buy that inventory. And then we make more of that stuff, right? Well, I felt that the financial markets give us an opportunity to take capital, leave it as capital, put it in a variety of different instruments, and I always have a buyer or seller for my product. So from my point of view, I felt it was a very efficient way of using capital. Now, this is around 1980 or so when I started looking at stock options. My background is I started with stock options, and I went over to the Board of Trade. What I realized at the options exchange, as an option trader, you manage price or you manage change with the Greeks. You don't really manage a position based upon price alone. So if you want to make an adjustment, you can get more delta long or more gamma short or whatever you want to do. But from my perspective, what I was looking at was delta neutral spreads. And I thought this is the best technique because you never have to worry about price movement. But you do have a new friend, and that new friend is volatility. So from my point of view, I didn't really eliminate variables, I just changed variables. And then I thought, well, let's take a look at price again. But then we're not going to be doing that at the options exchange. And these guys across the street at the Board of Trade, well, they had this stuff called technical analysis and other things that people are looking at to follow price. So I thought, is there some value there in that? And so I went over to that exchange, and my intent really was never to trade from the floor. My intent was really to always trade from a screen, and those ideas were just now becoming available. The reason I wanted to do that is because if I was in bonds, I had to focus on bonds only. If bonds were quiet, I'm pretty much standing on the sidelines. The opportunity is going to be different. So now, on a screen, if IBM is moving, if Cocoa is moving, if cattle is moving, we can take advantage of those different markets very easily. But, Jeffrey, at the time, too, technology didn't take us where we are today. I mean, you and I can, be any place, just like we are right now, and trade. I can be on a boat in Lake Michigan and trade. But at that time, being on the floor really was a big deal. It was critical because it allowed you to see where the whole market had to come together to participate in a market. So I went to the floor with the intention of trying to extract information about this thing, price. And what I did primarily was I stood between bonds and bond options on the old trading floor, and I'd look at a screen. And I'd say, is there anything on this screen that would tell me something about what's happening in the pit? And I got to tell you, I stood there for months and I didn't see anything. But when I started to focus on the top step, where the brokers were, and watching their hands to buy or sell, then it gave me some clues about what that chart's saying to me. So when I look at things from a technical perspective, my primary focus really is on from a floor perspective. What is it saying to me? What would it represent? So when I look at a chart, I also think about how it would have been on the floor if I was watching that pit. When I saw those connections, it helped me tremendously. Well, let's do it this way. When I first saw Japanese candle charts, I was in Tokyo teaching a course on market profile for Bank of America.
Right.
And it was for their clients, Industrial Bank of Japan, these other institutions. When I saw, actually what I was doing is I was going into the dealing room to find some trades. And in the dealing room, we looked at some bond trades. These are yield curve traders. And I saw a guy sitting there drawing these candle charts. And Kuno-san, the gentleman I was with, was kind enough to share some ideas about what these charts were.
You're drawing it by hand?
They're drawing them by hand. Yeah. He had the weekly chart and a daily chart of U.S. Treasuries on a huge, long piece of paper. And but they were like little works of art. The guy was so accurate; it was amazing to me. But what I noticed when they were talking to me, which was the focus was on naming patterns, I really felt that they were an indicator of the behavior I saw on the floor. So for me, when I look at a color of a candle, if it's red, it represents selling, green represents buying, a shadow on the top represents selling, and a shadow on the bottom represents buying. So I look at it from the point of view of a barometer of a market. What is it trying to show me? And I think of it as more the story is there, and my job is try to understand how to read that story, the opportunity that the market's giving me.
Right,
so
because in each candle there's a lot going on, right? In a daily candle you have a whole bunch of 15-minute candles that tells a different story.
That's right, what I call candle development. You're right. How that candle was constructed, the fact that it was green is one barometer that you and I can look at. But the other thing is that candle could have been created with a whole series of red candles, and the final closing price ended up making it green. So they were actually selling that day, not buying it, as that green candle may indicate. So looking at a shorter time frame, as you just suggested, is a good idea, because it's a way for us to get a feel for how this was created. The other thing I think, Jeffrey, that you and I would want to look at then is, where is that located? Is that green candle at the bottom of a trend, or is that the top of a trend? How it's created and where it's located, I think can give us some insights in terms of what's going on.
Well, Dan, I think we're running a little short on time. YouTube will probably cut us off in a couple minutes. So,
all right.
I know you'll be speaking at the Futures iTrade Expo in a couple of days, and people get to hear your whole story and get the full lesson of what you're trying to tell us now.
Well, on the expo, my perspective, the tool that I'm going to talk about there is kind of combining some of the candle ideas that we've discussed, but we're going to be looking at parabolics, which is a price overlay study. And there's a little twist in here that I'm going to be talking about as well with regard to that technique. And also, how do you and I evaluate when we're going to look at a new trading concept? And what we're going to be looking at are the strengths and the weaknesses of that technique. As we know, as a trader, that's part of our job, right? To understand the strengths and weaknesses of a particular technique.
Thanks a lot for spending the morning with us, Dan. If you guys want to see more of Dan's work, he has nightly free videos on dangramza.com. And what do you put out in those videos quickly?
It's 21 markets, 6 different sectors. And what I talk about is a general overview of what happened and what we're looking for the next day. It gives an idea of the intent is to give someone a reference of how futures move, and also a giveaway for someone who maybe only trades the E-mini to see that there may be some other markets they may find interesting.
And actually, for me, when I've watched a series of these videos over a week or two, I started learning your method and how you analyze the market. So it is an educational tool. It's not just giving out trade ideas and analyzing the markets.
That's right. That's really the intent. So I'm glad to hear that, Jeffrey. Thank you for that feedback.
All right. Well, we hope to have you on next time again, Dan, and see you soon.
All right. Look forward to it. Take care.
Bye.